AI is much bigger than just a chat large language model. You've got agentic AI, agents making phone calls, setting appointments, just doing stuff. You've got video, deepfakes, all the stuff that's coming out. So we'll see with earnings this week. It's a humongous week.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Peranio.
Hey, it's KP coming to you live from Austin, Texas. Let's go. I am at the IMB, Independent Mortgage Bankers Association show. Really, really good vibe here. Lots of people. We just had our opening sessions. Mike Fratantoni, Marina Walsh, everybody else, Laura Escobar. It was fantastic. Bob Brooksman's here, and generally pretty positive this year. It is inflation and labor, right? Those are still the things everyone's talking about to get rates to come down. But then I bet you didn't have Chinese AI ChatGPT copycat on your bingo card to make the 10-year Treasury go down to 450 today, which is what happened. So, you talk about technology being deflationary and AI being very deflationary. Imagine 2 years ago when we were all talking about ChatGPT, and then a Chinese company claims, which I don't buy it because all the Chinese companies lie. I mean, they're like notorious for lying and whatnot, but it did move the markets today. They claimed on older NVIDIA chips for only $5.6 million, there was a ChatGPT alternative build. So you think about large language models have become, somewhat commoditized, and AI is much bigger than just a chat large language model. You've got agentic AI, agents making phone calls, setting appointments, just doing stuff. You've got video, deepfakes, all the stuff that's coming out. So we'll see with earnings this week. It's a humongous week. There's the Lion Hotel going to the Moorpack event, raise some money. Big earnings week, right? So Apple, Meta, Facebook, Microsoft, Tesla, all these AI leaders are going to talk about, their Q4 earnings and then how they're looking at the rest of the year. And if spending less on chips is in the cards, as we found out today with the market, that could be very deflationary for worker productivity. And so we'll keep an eye on that. The personal consumption expenditure comes out this week. Fourth quarter GDP comes out this week. How are we doing? If there's any slowdown or inkling of a slowdown, I think the stock market could sell off a little bit more. I am not a financial advisor. I'm not responsible for your losses, only your profits. That's an actual legal disclaimer. And the Fed meets. It's Fed week, kind of a big deal. So we don't expect a rate cut, of course, but we'll get, the presser, and they'll talk about all the stuff going on in their thought process. And, there's other things that impact inflation. Tariffs was less than feared. So, everyone pounding the tariff table, thought that we'd have high inflation because of that. And that was a 20 basis point sell-off and improvement in the 10-year Treasury yield because of, talking points out there about how inflationary the tariffs would be, and they're not. And not yet, could be. And you talk about deportation, and people use the words mass deportation. I don't really know what that means. Hey guys, I don't really know what mass deportation means, but I was on a flight home. This is my 5th trip this year, and I saw a Bloomberg study on the flight home last week, and it said during the Obama administration there was 400,000 immigrants that were deported. And what was the inflationary impact of 400,000? Now that sounds massive to me. So will the Trump administration do 400,000? Nobody knows. How long until they start doing things? I know they just sent 2 flights, planes full of people to Colombia over the weekend, and on a Saturday, the Colombian president didn't want his own citizens back and said, don't land your planes here. And then Trump said, okay, we'll do a 25% tariff on everything. All your visas are revoked. We'll make it hard for you to come to your country. We'll cut our aid to you. And within an hour, the Colombian president acquiesced. And so that is, I think, inflation and deportation coming together in an example of actuality, as opposed to just legacy media talking points and all the weirdos that are super extreme but just don't just don't know. No one knows. Nobody knows, right? So, but that was the reality. That was a data point that came out, and that gave us, hey brother, how you doing? Good to see you. I'm doing it.
Awesome, good stuff.
Good to see you.
Good stuff right there.
We got Lennar in the house. So interestingly enough, with the Obama administration, when deportation happened, 400,000 people were deported. It actually was deflationary. It was disinflation created. And the reason why is because everyone keeps talking about how much it's going to cost to send everyone back. But the reality is, if people get sent back, there are less jobs. And businesses in those areas don't have as many people spending money in those neighborhoods and those communities. And so that was a Bloomberg, which everyone knows is far left. Everyone knows, Michael Bloomberg hates Trump and tried to run for president multiple times. That was a Bloomberg study. So I'm quoting you. So I'm giving facts and data to kind of put some guardrails around all this talk about mass deportation and tariffs and inflation and where it's going to go. By the way, new rents are the lowest it's been in years. So everyone knows if you get a new lease right now, the BLS reported this, not just Zillow, the Bureau of Labor Statistics, which is data that all the Fed policymakers look at. It was a massive drop off in December. And we know that owner's equivalent rent has been dropping off in November and stayed flat in December. So there's still deflationary forces out there. There are some humongous high comps from a year ago on CPI that are going away, the next few CPI prints. So who knows? We could catch a little lift here going into the new year. And, I don't claim to know everything, and I'm not trying to get political, but, it's interesting when this stuff creeps into what we talk about. We have to try and exercise some emotional intelligence and not let our extreme political biases be a headwind in front of what seems to me a very pro-business first week on the job. I like business. I help run a business. All of our teams out here, we all run a business. We do, real work in the communities. We all want lower rates. Anyone that, and I'll just because I can't help myself. When Trump demanded that interest rates be lower, like were you one of those people who are like, oh, you can't just wave a wand? Let me tell you how it works. We all know how it works, okay? We know you can't wave a wand. Everyone knows that. Like, you actually took the time to write that and put that on here. It's crazy. The point is, this president and administration wants lower rates. They're going to do what it takes to get lower rates. They're going to do what it takes to get lower oil. They're going to do what it takes to, do everything, I think, except be fiscally responsible, because Congress passes a budget. We all know that. And we have some pretty hard and fast anchored costs. Social Security, Medicare, Medicaid, defense spending. So it's going to be hard to see inflation come down because of the government spending in any kind of continuing resolution. Having said that, love the fact that there's less regulation, and Scott Bessent was approved today as U.S. Secretary of the Treasury, which is huge. They've helped fund our government together with the Fed. They sell treasuries. Our treasuries are still very attractive, and they try and make sure that we can sell, the U.S. government and economic power around the world. So Scott Bessent said his biggest priority is extending the 2017 Trump administration tax cuts. That's their number one priority. Didn't hear him say anything about the government, and so I'd love for someone to call him out on that. I'd love for them to talk about fiscal policy and the $10 trillion of treasuries coming online this year from past spending, over the many years. And I'll add one more thing. CFPB Director Rohit Chopra, I read in an article today that he's really been talking with Vice President J.D. Vance, who, as you know, him and Melania are really the two insiders in Trump's ear right now. And if Rohit Chopra can make some kind of pivot and stick around as a CFPB director, that does bring some consistency, and he's now experienced at the helm with the team. And so if they can come up with goals that are aligned and, be a champion for whatever this administration wants, could be a win-win. So throwing a bunch of contrarian ideas out there for you on a Monday in Austin. It's a little chilly. Gonna go inside and drop a donation to MorePack. MorePack's great. Join MAA. Have a wonderful week. I'll catch you on Thursday. Hey, it's KP coming to you live from Newport Beach. Well, we're wrapping up a week here. It's Friday. I want to wait for the PCE report to come out, and I just finished The Last Word. It's a podcast I do every Friday at 10 a.m. Pacific, together with Brian View, hosted by the Crispin Commentary. And today was Jody Hall's last official co-hosting day as she assumes her role running as the president over there, as CEO of the Mortgage Collaborative. So we wish her best of luck. Lots going on in macro news today, and I thought I'd get an update. Just got home last night from the Mortgage Banker Association's Independent Mortgage Banker Show. So the MBA, a huge, incredible advocacy group on behalf of the industry. Love for you to be part of it. If you aren't, definitely should join. If you're an independent mortgage banker, try and join our monthly IMB calls that we host together. Jason Stenger and I are co-chairs for that committee. And we were running around in Austin for the IMB MBA show. It was great content, really big heavy hitters come out for that. You know, Stan Middleman, Terry Schmidt, David Nalen. So you've got, Guild there, you've got Freedom there, you've got Loan Depot. You have a lot of great companies that are huge. Rockets there. It's just a big group. And so hopefully some of the takeaways I can share with you that I would just say people are generally positive about this year. About 50% of loan officers are no longer in the business from the peak a few years ago. So capacity has shrunk. So it will feel busy any kind of little dip in rates like we saw between July and November. And there'll be more like that to come this year. I'm sure of it. The PCE was, still up 0.2% month over month. The core personal consumption expenditure, that is the Fed's preferred measure of inflation. They call it the Fed deflator. But 2.8% year over year headline, I think 2.4 headline, 2.8 core. So we've got some really big comps on that index that will be replaced in the next couple months. And if they're all replaced with 0.2, we're going to see that number come down quite a bit from the 2.8. So good trend coming our way. Of course, labor is super important, probably more important, or at least slightly more important. Jobs week next week, so we'll get a bunch of information on the healthy economy. Speaking of the healthy economy, 2.4% GDP in Q4 was the read we got this week. Consumer spending was strong. Inventory buildup was a little bit low, more than likely because there was a higher pull forward of people stocking up on inventories for fear of tariffs raising prices on those goods. And we'll see how that all shakes out. President Trump announced this week that he's going to put a February 1st deadline on coming out with their first round of up to 25% tariffs on Canada and Mexico. We'll see the details of that. The bond market didn't really react negatively like all the fear leading up to this week, which is surprising. So less than feared. Take a look at the 10-year Treasury. I think it was at 450 today. Who knows what it's at this moment. Dollar's getting weak compared to other currencies. The Bank of Japan raised their rates. It was a hawkish raise. And so the Japanese yen strengthened against the dollar and the euro dollar strengthened against the US dollar. Those are actual tailwinds for the stock market. Those are tailwinds for interest rates and the 10-year yield coming down and mortgage interest rates coming down. So we'll keep an eye on all those things. New home sales and existing home sales ticked up in December month over month. Now, of course, January and February is seasonally slow for our business. Today's the last day of January. We're ending the month. What I would say on a strong note, I think our lender is representative of many since we're a 3-channel lender, and the insights that I can glean and give to you all here and LinkedIn is that business is up year over year, January versus January last year. And we think the same thing for February and every month going forward. So we're pretty bullish on this year. We have our sales rallies for our 3 channels next week. We do it once a year, so it'll be good to get people pumped up and talk about the insights that we're doing. Retail channel leads first. We've got 2 stages we're actually doing it at, South Florida and Southern California. So a big group, East Coast and West Coast, coming together, getting fired up and going over all the things that are our initiatives this year. New emerging tech, we just rolled out this week, Figure Technologies, HELOCs for our retail channel. And then next Thursday, our TPO channels, wholesale and correspondent, will have their sales rally. And I don't talk about that stuff to be a PRMG, advertising or billboard here. That's not my bag here on this platform. But just to let you know that, our company, like many companies, are fired up for this year, and we're getting the word out to our people and to the industry about what we're investing in. We have a new TPO portal that's about 30% of new files coming in through wholesaler on, and we think by March we'll have a hard cut over to that new portal. It's a proprietary portal. And then later on this year, for our non-delegated correspondents, they'll be able to draw disclosures and CDs on that, and we'll be one of only 3 lenders that allows that. So lots of investment going on, tons of AI stuff we're doing behind the scenes. At IMB, Jason and I were moderating a peer-to-peer roundtable at the end of the day on Tuesday for about an hour and a half, about 13 tables with 6 to 8 executives talking about TCPA, which is the Privacy Act, just talking about that as a threat to IMBs. We've talked about cost-cutting measures we've done, AI and what we're doing with it, and revenue and sales generating activities. So lots of good ideas that came out of that from some top-tier executives that really only participate when the MBA puts on an event. So super, super helpful to be part of the MBA. I'll just add, I'd be remiss if I didn't give a warning. I talked to Woody out of Austin, great guy. He was an expert witness in a case that we settled as the plaintiff and got what we needed to get done. I'll just leave it at that. And he alerted me of the latest threat to independent mortgage bankers right now. If you took PPP funds during COVID, if you took funds from the government, there are blood-sucking attorneys lining up for 32 lawsuits currently right now to try and sue you for not coding it right and, quote, defrauding the government. So if you said you were a mortgage broker and not a mortgage banker, or if you're a bank, you didn't say you're a bank, or whatever the case may be, if you, just look out. There's these LLCs called Real Tour. So you can look up the LLCs and you can see and start fortifying your defenses against these loser attorneys that just go out and get a money grab. They want you to settle. They want you to spend money. They want you to give them money when you were struggling during COVID and needed some help. And so, we didn't take PPP money. We were a bigger lender. We felt good about 20 and 21. Didn't feel right to take it. We did second guess ourselves why we didn't take it. We pay taxes like everybody else. Maybe we should have grabbed those funds. And then here's this Trojan horse coming around the corner for independent mortgage bankers that took the funds. And so just want to get that tip out to everybody here in the community. I'll say there's a lot going on. DeepSeek came out this week. It was very interesting. Their open source AI, which obviously, you can't ask what happened in Tiananmen Square and get an answer. You can't ask anything that's negative about China. So it's not really that open, is it? I don't think it's on the same level as ChatGPT at all, but the claim obviously is that they were able to build a large language model for a very cheap amount of money, $5.6 million. Some of the research I saw said that they had 200,000 NVIDIA chips, 200,000. And just to put that in perspective, Google's buying 200,000 chips from NVIDIA this year. So it's not like they did it cheaply. They built off a foundation that's been being built since 2014. And so large language models should be commoditized. It's just answering questions. It's just Q&A. But where AI is going beyond that is analyzing data, analyzing documents, doing task routing, doing things for you, driving cars currently, having a robot that's going to do laundry for my wife, the one thing she hates, and I can't wait to buy her Optimism, playing piano, serving drinks, all the things, creating video content at scale. There's a lot more that AI has to offer. So my takeaway on DeepSeek is maybe the chip order, the backlog, the 2-year chip order for NVIDIA, the moat that they've surrounded around themselves, which, by the way, they're a software company for those chips, not just a hardware seller. Maybe less chips will be bought in 2027 and maybe even the tail end of 2026. But earnings season is in full force. Earnings matters. Guidance during earnings matters. We saw some big cap tech companies give earnings this week. We'll have NVIDIA later on in February. And we'll see how they're doing. I doubt for now in the foreseeable future, the stock market really doesn't look far beyond 3 and 6 months. But if earnings are good and companies are doing well and tariff talk isn't as much of a headwind as people think, and oil and gas prices continue to come down, then the consumer will win. Consumer confidence dipped down a little bit. There's also some political disparity there. If you're a Democrat, you think things are going to get worse now. If you're a Republican, you think they're getting better. But institutional confidence is actually pretty high. And if you want to call them the smart money, even though they can't see that far forward either, they're pretty confident going into 2025. And I think that's a sign. And so as all these data points come out and smooth out over time, and us and the Fed and all of our companies and people analyze the data without bias, then, we're going to see where the chips may fall. the trend is positive, and hopefully everyone believes that. Will there be a $500 billion investment in Stargate data centers that the Trump administration is trying to push with SoftBank and Microsoft and everybody else? Probably. They'll probably still build those. Trudeau resigned to Canada. There'll be a new leader there later this year. One of our biggest trading partners. 11% of the oil and gas that we use in this country comes from Canada. We get oil and gas from Mexico. We get goods and autos from Mexico. We get wood and lumber from Canada. So it'll be interesting to see how the tariff on our two trading partners shakes out. We have trade deficit with those nations when we are the biggest spender and consumer in the world. And so maybe some of those trade partnerships, not just them, but around the world, will come a little bit more in balance. And if tariff is the tool to get there and it's not too disruptive, great. If it's too disruptive, then everybody will blast, Trump and tell him, he messed up. And so again, we'll see where it shakes out. And, no one really knows until it actually happens. And not everything's going to be good. Not everything's going to be perfect. And everyone's going to have a talking point to talk about, some picture you saw online versus what's actually happening economically. So what are people talking about when, we're just a couple weeks into a new administration and we're trying to be pro-business and we're trying to get people in the cabinet up there, especially in housing. Will CFPB retain Rohit Chopra? Will they have someone else? Will Bill Pulte at FHFA, impose less regulation and help us cut through red tape to build more houses that we so desperately need, especially for affordable lending? There's so much out there. And so all we can do is watch the data as it comes out, and we will, and I'll report back to you, and I'll get back to you next Monday night with our next video. Have a wonderful weekend. Let's wrap up January here at month end. I know we got a ton of deals going to closing here to wrap the day, and we'll spill the rest over into February, our short little month. Stay warm, have fun out there. Thank you. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Peranio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.